Good afternoon. Welcome to Option Standards Friday. Welcome, everybody. Hope you all had a great trading week. We're going to go through SPY on the weekly because it's Friday, wrap up the week and go down to the 65. We'll check out the VIX. I want to do some individual names. Please consider supporting the channel, going to the description, $3 reoccurring in the Patreon page to help support these videos. I want to do all kinds of individual names that I follow and such so we can get a good understanding and educate on individual stocks as well. So Tesla, I have a couple things going, and Boeing is a good one too. So anyway, let's jump into it. Thanks for all the likes. SPY on the weekly time frame. Yesterday, we moved our trend line from 2000 top, and we're right there at it with a possible reversal candle. Now I'm going to move it back to where I think it's much more likely to go. And just notice here, I just went up to the top of the WIX. You could use these other bodies as well. There's different ways you can use trend lines, but I just want to go to the benefit of the doubt up here. And there's a real reason around 540 to 545 indicated yesterday, and I'll go through those quickly again today. But what's most important is the 65 and see when we can start buying the dip again. All right, so on the weekly time frame, we're forming this doji candle. It's a possible reversal. Maybe we get a little bit of follow through, and I'll show you what that might look like. So we're above the 8 EMA. Still bullish. That's our trend indicator. So that says we're above. Maybe we come back and test it. It's possible. That's around the 418, 419 area. It's 418.49. You see the turquoise numbers on the right here. And that's pretty much it on the weekly. We do have divergence forming on the RSI. We also have divergence on the MACD. Okay, so I do think that this move is more towards the end of its. We possibly have one more leg up, or even two. And I described that yesterday. We'll go over it again. We have the slow stoke getting up to the higher areas here, to the oversold, but it could stay there for a little bit, and we'll be looking for a little bit of divergence on there as well. But the RSI, notice we already had a correction here. So I do suspect, even though we have a lower high here, I do suspect another negative divergence before this all is said and done. Excuse me. Okay, so let's go down to the daily. Daily trend is our friend. Here's a daily technical, the traditional technical analysis. We have our highlighted in white, our wedge. This is our ending diagonal wedge. And there's the bottom of the wedge. So in a nutshell, above this trend line, we're going to stay bullish. Okay. So it's possible that this could be a very shallow reversal. And so far we have an inside day that could easily be a continuation into next week. And by the way, we're closed on Monday. The market is closed on Monday. So we'll begin trading again on Tuesday. So maybe during this long weekend, I consider putting some more educational stuff out. And again, if we get some support, then, I want to do a full video on Tesla. So let's see what happens. But we're holding on to that 8 EMA as of today. Can this be a continuation to the upside? Absolutely. We'll see what happens on Tuesday. I would guess that I think it's more probable that we have a little bit more downside. And that downside could end up being another big move. And I'll show you what the timing relationship kind of says to us as well. Okay, so we have the 20 underneath. This is all-time highs. We got right to the very peak of the all-time high there. We start to break down from there. Then we have the 20 and the 50 along with this trend line. So above this trend line, we're going to be bullish. For anybody that's new here, here's our projection. That's what we're looking at. This being an ending diagonal, ABC for 1, ABC for 2, ABC for 3, ABC for 4, and we're looking for ABC for 5. So I don't know, even if this ends up being counted different, the two scenarios that we're going to look at is a ABC to complete or an ending diagonal where possibly the waves overlap each other. This being a possible 1, 2, 3, 4, 5, and so on. And I'll show you some of those targets there as well. And just notice that on this ending diagonal, this is the daily time relationships. We had the reversal on the 23rd. You see the dates down here. And now we have, we're looking for another time relationship on 5/28, 5/29. Yeah, we're looking at about 5/28, and I think we have some more on the lower time frames at 5/29. Okay, so and that has wiggle room. You'll notice how that as we go through these videos, often you'll see that it can happen, at the end of the day, beginning of the day, starting off on the next day could be the bottom, things like that. So here's my kind of projection here, where this is an A. Get some sort of correction, possibly down into the zone, which would be that uptrend, and then have a bottom next week at that 5/28, 5/29 area. That would be, Tuesday or Wednesday, starting off the week. Somehow get a bottom into Wednesday, let's say, and then work our way up to the next targets. There's 3 targets. We completed the first target, really had trouble at it, gapped up above and did a fake break, couldn't hold above it, and so now we're getting our move to the downside with the dead gap bouts today. Now the next move, we're looking for the 150 extension. That's 545.92. So notice that's right in that zone that we're talking about, where the trend line is up above. That's at 540 to 545 area. Now right above there is, and this is going to take a lot of time if and when this does happen. 560 is a very extreme point, very extreme move, but that would be our final target there at the 162% extension. What's that extension of? That extension, those 3 targets are the extensions from this entire move, this entire correction. So first, when you are looking at retracements, price is going up, it's retracing, but once you get above the 100% point, ground zero, now they're extensions. Now you look for the 127 is a very important, then the 138, and then the 150, and then the 162. So those would be our extensions up there, with the 162 being the last one. All right, and you do that on lower time frames as well, and I'll show you down on the 65. So let's go there and start off with the technical and the traditional technical analysis. All we're doing, just to keep this very simple, is we're just filling out the wedge. Okay, filling out the wedge. Do we have to come test the bottom? No, but is it, is that comforting for the eye? Is that symmetry? Sure. We can make it down there, and I'll show you different levels to look at. And look at that. We have our 200 simple moving average for the 65 minute. And so here's my time frame of that timing for 528, 529. So that would be a pretty sharp move going into Tuesday and Wednesday, maybe gap and go. But we'll see what happens. We'll have to rely on price action to tell us what it wants to do. Okay, so all we're doing today is back testing this uptrend line. All right, broke down from the channel, back testing, and I do think we fill the gaps. And at minimum, I'll show you the different levels. And notice that we have a gap here and a gap down here. So we hold this gap going into 529. That would be a wonderful long play calls. So going into the Elliott wave and Fibonacci, etc., this is our potential A or 1. All right. This move, I do believe, is completed. We have the high here right into our 127 extension. That's all we did was go back to this retracement. And after you get over the 100%, now the extensions start. So our important extension area, we gapped up into, and we immediately went short on that spot there. So it was a fake break, got up here, had unfinished business down here. Now I think we're just getting a dead cat bounce. And now the lower levels, this entire move here, if you're not familiar with the retracements, if we think this move is over, this entire move here, this leg or this wave, now we have the full extension from the bottom to the top. And our first area, we didn't even get to the first retracement, which is the 23% retracement. All right. We didn't even get to it. So I believe that this is all, again, unfinished business. If we just barely make a low and just start heading higher, I mean, that's a possibility. That's very, very bullish. Okay. And so in my opinion, that would be something that forms into maybe a triangle or something like that. If it holds something low, I don't know. I don't think that it would just continue higher right from there. I think it has some consolidating to do, some resetting of the indicators before heading higher. So this could waste a little time. Now, if it's a much sharper move to the downside, which I think is a little bit more likely, because the trend line is lower here, and I think it wants to scare people. That would be the kind of tactic the market wants to do, get the bears all in and have the bulls sweating right down at the trend line. That would get us down more into this. Here's the 518. That's the 382 retracement, all the way down to 513. So it's going to be, if we hold the trend line somewhere down in the zone, could it go further and still be valid? Yes, but we'd have to redraw our trend lines and do some finagling. I'm just not sure that that's valid for this play. We have so much support before it. So my guess is the more extreme area would be this 513.50, and that's if we get down there really fast into that. If you look at the time relationship down at the 529, now I can get rid of this one. We had a cluster at 523, meaning May 23rd. And now we're at the 24th where we're getting a supposable high in. Okay. So that's another time relationship right here. And what do I mean by time relationships? Okay. If you have a point of reference, a low, a good low, and a high, you can use your tool for the time ratio right here. It's a Fibonacci time ratio. So I start off at the low point and go up to the high point, and it gives you those ratios out there. And you do high to high to high, high to high to low, and you see where clusters end up. So you can go from low to low, for example, and then you see where the clusters are. So we have one of those. We have a point of reference on the daily into the lower time frame at about 528, 529. So that could be a low. What also could be a low, and time doesn't tell you where price is going. It's just if price is down here, if price is right here onto that day, then it's likely that this is going to be the low. Now you have another one on 531. You have a good cluster of time relationships. So maybe it takes a little bit more time to get down there. Okay. And then we have another time relationship for something that happened there. Okay. So I just put this box in here. This is kind of the time frame. I can actually extend this box now that we got that bounce. So I think our lower, if we do break these lows, I think this is kind of the zone that we're looking for, not the 618. This zone right here would be kind of that good zone for price to make a low. And then I think we have on the 65 minute, you have that 162% extension, and that's at 540 to 545 area. I think that's our next target. Time references, I'm not sure, but I think it's going to take some time. So I'm looking out to mid-June before we have another real correction. But in between, this is not going to be a straight line, okay? So these time ratios will be important, but I think it'll be a buy the dip, especially all the way up until we get to this target zone here. And then that's going to be a whole nother story at this point. Do we get a buy the dip? Do we crack below wave one and then get another high out of it? That would be our another ending diagonal in a ending diagonal. Okay. Now that wouldn't really make too much sense. I'm not going to go through this whole counting business. I would have to count the rest differently. But even then, even if this is an A, a B, we can still have an ending diagonal into a C, okay? What I want to say is Elliott wave is just kind of giving us structure. It's speculation on what could happen next. I don't want to rely on that. I want to rely on some of the counts with indicators and time relationships, along with support and resistance. It's so important. Okay, so all those things put together, now we can, after we get to this point, we can see, hey, maybe that's it. We had much lower, but if we hold an important key area, especially above the former all-time highs, you can't be too bearish because price action could go a little bit higher. All right, I ranted on enough about that. Let's go to the VIX. And this is part of looking at what the VIX is doing, gives us clues on this entire, on the analysis and where the market might go on the highest probabilities. So we had this wedge breakout and a nice move in the VIX, kind of stalled here at the 13. If we can make a higher low, we're back at that complacency on the $12 mark. I think we might get a new high, possibly to test, maybe to close this gap, and we'll see if this moving average, is the 200 moving average, holds price. Maybe it spikes into the 1550 and then breaks back down, and that would start the market heading higher at that point. And then we'll probably, if we're looking for new lows, we might have to make this into maybe a channel or something like that later on. But we'll have to see when and if that happens. So that's why we do these videos often. As soon as we get some new information, we reject it off of here, so we're getting a bounce. Now the VIX starts to spike again, then we're going to start heading lower on the indices. Okay, I am short again. I am long on Boeing, but I am short in the market, and I'm long on Tesla as well. And please consider giving some support. Joining that Patreon, reoccurring $3. And with that, I'll leave you there. We'll join you each and every day as we get some support. I'll try to educate and give new videos every single day. Thank you for joining us here at Option Center. Have a wonderful day. We'll talk to you tomorrow.